What if the very institution that gave birth to Ethereum is now spawning a new entity laser-focused on bringing banks into the blockchain fold? As of today, Wednesday the 15th of July, 2026, that is precisely what is happening. An Ethereum Foundation spinoff has officially set its sights on the world's biggest financial institutions, pitching them a proposition that was unthinkable just a few years ago: enterprise-grade blockchain technology paired with robust, cryptographic privacy protections. This is not a speculative roadmap, it is happening right now, and it is sending ripples through both the crypto markets and the traditional banking sector. With Ethereum's price eyeing a technical target of $2,163 following a completed double-bottom pattern on the daily chart, the timing of this announcement could not be more significant. The question is, what exactly is this spinoff offering banks, and why would legacy financial institutions even consider it? Stay with us, because the answer changes everything you thought you knew about crypto and banking. The spinoff in question emerged directly from the Ethereum Foundation's orbit, a move that signals a deliberate and strategic pivot toward institutional adoption at the highest level. Rather than remaining purely a research and development engine focused on the Ethereum network's core protocol, this new entity has carved out a distinct mandate, targeting Wall Street and the wider global banking community with privacy-first blockchain infrastructure. This follows a broader trend that crystallized in early July 2026, when Ethereum's institutional backers formally launched an independent nonprofit designed specifically to court Wall Street wealth. The message being sent is crystal clear: Ethereum is no longer content to be the preserve of retail investors and DeFi enthusiasts. The Foundation's spinoff represents the sharp end of that strategy, bringing institutional-grade tools directly to the doorstep of legacy banks. Think compliance-friendly smart contracts, confidential transaction layers, and on-chain settlement mechanisms that do not expose sensitive client data to public view. This is a fundamentally different product offering from anything the Ethereum ecosystem has built before. Now, you might reasonably ask why banks, historically cautious, heavily regulated, and notoriously slow to adopt emerging technology, are the primary target audience here. The answer lies in one of the most persistent and stubborn barriers to institutional blockchain adoption: privacy. Public blockchains, by their very nature, are transparent. Every transaction is visible to anyone with an internet connection and a block explorer. For a retail bank processing millions of client transactions daily, or an investment bank moving billions in securities settlements, that level of transparency is simply unacceptable. Proprietary trading strategies, client positions, and confidential deal flows cannot be broadcast to competitors on a public ledger. It would be the financial equivalent of leaving your safe door wide open. This spinoff is addressing that exact friction point, offering cryptographic privacy solutions, including zero-knowledge proofs and confidential computing techniques, that allow banks to transact on-chain without exposing sensitive data to the public. It is the same privacy-first institutional thinking that led Polygon's Midden project to secure $25 million back in April 2025 to bring speed and privacy to institutional giants. So what does this privacy infrastructure actually look like under the bonnet? At its core, the spinoff is building on cryptographic primitives that have been quietly maturing within the Ethereum research community for several years. Zero-knowledge proofs, mathematical techniques that allow one party to prove knowledge of certain information without ever revealing the information itself, sit at the absolute heart of this offering. Banks would be able to verify regulatory compliance, prove solvency to auditors, or confirm that a transaction is valid without ever exposing the underlying data to the public blockchain. Beyond zero-knowledge proofs, confidential computing environments, sometimes called trusted execution environments, add another critical layer of protection. These create secure digital enclaves where sensitive data can be processed without being visible even to the infrastructure provider hosting it. For banks already grappling with stringent data protection requirements under frameworks like GDPR and Basel III capital rules, this combination of technologies offers something genuinely compelling: the efficiency gains and settlement finality of blockchain, without the regulatory headaches of full public transparency. It is a technical solution to a very real institutional problem. The timing of this spinoff's public push is not coincidental, and it does not exist in isolation. In recent days, the institutional momentum around Ethereum has visibly and measurably accelerated. Bitmine and SharpLink, two firms with strong institutional credibility and financial sector connections, have both backed EthSystems, a new Ethereum infrastructure startup explicitly targeting institutional clients, with news confirmed on the 15th of July, 2026. This signals that serious, strategic capital is flowing into the space, not merely speculative venture funding but calculated investment from entities that understand precisely what banks and asset managers actually need from a blockchain platform. The independent nonprofit launched by Ethereum's institutional backers in early July further reinforces the broader narrative. There is now a coordinated, well-funded, and organized effort to bring Ethereum-based infrastructure into the heart of global finance. Each of these developments feeds the same core thesis, that 2026 is shaping up to be the pivotal year Ethereum transitions from a crypto-native protocol into a foundational layer for institutional financial infrastructure worldwide. The market has taken clear and decisive note of these developments. As of today, Ethereum's price is targeting a technical level of $2,163, with analysts pointing to a completed double bottom formation on the daily chart as the key technical catalyst. A double bottom is a classic bullish reversal pattern. Its completion signals that downside selling pressure has been absorbed and exhausted, and that buyers are now stepping in with genuine conviction. While price action alone does not validate a fundamental thesis, it does reflect growing market confidence in Ethereum's institutional story. When credible spin-offs begin targeting banks directly, when institutional-grade startups attract serious backing from named firms, and when technical chart patterns align with the fundamental momentum, it tends to attract a fresh wave of capital from momentum-driven institutional allocators. The correlation between institutional adoption news flow and ETH price strength in the current cycle is becoming increasingly difficult for even the most skeptical market observers to dismiss. Looking ahead, the trajectory here points firmly toward deeper, structural integration between Ethereum-based infrastructure and traditional banking operations. The immediate next steps for this spin-off will almost certainly involve pilot programs with select financial institutions. These things rarely begin with a full-scale rollout. Expect to see proof-of-concept deployments in areas like interbank settlement, trade finance documentation, and tokenized asset management, where the benefits of blockchain efficiency are most immediately quantifiable and the privacy requirements most acute. Over the near term, the success of this initiative will hinge significantly on regulatory engagement. Banking regulators in the United Kingdom, the European Union, and the United States will need to develop clear and workable frameworks for on-chain banking activity before institutions commit at scale. The Financial Conduct Authority has been signaling greater openness to regulated blockchain infrastructure in recent months, which could meaningfully accelerate UK-based adoption. The architectural foundations, both technical and regulatory, are being actively laid right now, on the 15th of July, 2026. Here is the takeaway from today's landmark developments. The Ethereum Foundation spin-off targeting banks with blockchain privacy is not a headline to scroll past. It represents a genuine, structural shift in how blockchain technology is being positioned, packaged, and sold to the most powerful institutions on Earth. Privacy-first infrastructure, institutional-grade tooling, and serious, named financial backing are converging at precisely the moment that Ethereum's price technical picture is turning decisively bullish. Whether you are a crypto investor tracking the ETH price toward that $2,163 target, a banking professional wondering how your institution will respond, or simply someone trying to understand where the future of finance is genuinely headed, today's story matters enormously. The bridge between decentralized blockchain technology and the traditional banking world is not a distant concept. It is being actively constructed, funded, and regulated right now. And the Ethereum Foundation spin-off is holding the hammer.